Diversification is one of those things you tend to hear a lot about. We typically talk about diversifying our assets and diversifying our income streams, but we often overlook the opportunity to talk about diversifying our tax strategy, and that's what we're going to discuss today. There's three basic categories we want to look at when it comes to diversifying your tax strategy. The first is post-tax. These are assets that have already been taxed and get more favorable tax treatment as a result. So this would be like your bank accounts, your brokerage investment accounts, but really any other post-tax asset. So that could be real estate, precious metals, even crypto. See, all of these are assets that post-tax money goes into. And apart from perhaps having to pay a capital gain in certain cases, they don't get taxed again. Then you've got pre-tax. These assets have never been taxed. And so when you access them, they'll be treated as income and you'll be taxed normally. So that's going to be your 401k, 403b, 457, all those fun things. Traditional IRA, but also SEP and simple IRAs. There's various other pre-tax retirement plans out there as well, but that covers the bulk of it. Our third category is tax-free. Now, I'm going to put the free part in quotes because nothing's really free. But this is where your Roth IRA, this is where your Roth 401k come into play. And assuming you follow the rules around those, you can put post-tax money into them and then eventually access the growth with no additional tax on any of the growth over time. There's also life insurance vehicles like Alert, life insurance retirement plan. And then you could even consider some tax-free opportunities that might exist in the realm of real estate exchanges and annuity exchanges, but this gives you the gist of it for now. So the reason I talk about this as diversification is because imagine in a future world, either during retirement or in a work optional lifestyle, you're looking at being able to tap into these buckets depending upon what's most advantageous. So for a given spending need, or even just for your monthly expenditures, you could choose if you pull your money from post-tax assets, which may or may not have a tax on them, depending on whether or not there's a gain, pre-tax assets, which are going to get taxed at your normal income percentage, or tax-free assets, which won't have any tax on them at all. Now, your specific situation is going to vary. How you approach filling up these, there's a lot of different ways of doing that. But the important thing is to understand all three categories exist, and it's worthwhile for you to look at your own game plan and see if you could diversify your tax strategy further and give yourself greater flexibility in the future.